Hello, everybody. I hope you're doing really good. I am on the moon right now. Excuse my appearance, but this trip has been extremely rocky and rough. But now that I landed on the moon, I can finally make a video about Palantir. Earlier today, Palantir had their earnings call for Q3 of 2023. This was literally the best earnings call that I can remember for a long, long time. Maybe the first one or two earnings from when I first started covering Palantir were better than this, but this was definitely the best earnings I can remember in the last year and a half. Not only did we have the hype cycle, not only did we have this is what we're doing, this is what we're going to try to do, we actually, for the first time in a very long time, had actual execution. And that's why at the time of making this video, Palantir is up nearly 20%. At one point, Palantir was up 22% for the day. Last time I checked, Palantir is up like 18%. And right now it's somewhere right around that 20% range. Where it's going to end, I honestly don't know, but I truly do believe that this is just the beginning. In today's video, I want to give you the facts. I want to give you my opinion. I want to give you my thoughts on today's earnings because we need to unpack it. It was jam-packed with goodies and gems. So sit back, relax. I'm not going to share too many screens. I'm just going to do talking so you can listen to this in the background. If you guys appreciate this type of content, please give me a follow, give me a like, give me a share. And if you don't, I don't care. Suck it twice. Let's go. Adjusted earnings per share were 7 cents per share. The estimated or the expected was supposed to be 0.06, which means we beat. Now, actual GAAP earnings per share, we came in at 3 cents. The expected was supposed to be 1 cent. As a matter of fact, this is our fourth profitable quarter, GAAP profitable quarter. And this is the first time we did 3 cents instead of 1 cent, 1 cent, and 1 cent. This is a really, really big deal if you guys don't realize. What's the difference between GAAP profitability and adjusted earnings per share? Well, GAAP is the number at the end of the day, and adjusted is when you exclude certain expenses, restructuring, gains, losses, things like that. So, you could take it whatever you want, but at the end of the day, the GAAP numbers is what matters most. Revenue was at 558 million, which means that we did a beat of 0.5% or 0.5% of the expected 551 million, and we're actually up 17% year over year. That is really good. Is it phenomenal, 30 or 35%? No, but the numbers are getting better, and that's the most important thing right now. And I do believe that the numbers are going to continue to get better. And if you give me a moment and stick with me, that this video is going to be a little bit longer, I'm going to break down all of the numbers so you guys can see it for yourselves. Palantir's forward guidance was raised. It was supposed to be 2.21 billion for the entire year. And now it's 2.216 billion on the low side and 2.22 billion on the high side for full year 2023. Now, you might not understand what I just said, but we beat on the low end, we beat on the high end, and we beat on forward guidance. We had a triple beat for the first time in a long time, and we did really, really good. We beat in earnings per share, we beat in revenue, and we beat in guidance. Now, cash from operations came in at 133 million, but I don't think that tells the entire story. I think you need to understand the growth from last quarter. So 133 million cash from operations, and last quarter it was 90 million. We went from 17% margins last quarter to 24% margins this quarter. You don't really need to understand the definitions of this, which I'll give you in just a moment, but just look at the massive growth. From 90 million to 133 million, from 17% margins to 24% margins. And then for the adjusted free cash flow, we actually went up, which normally this doesn't happen. The adjusted free cash flow is usually less than cash from operations. We had 141 million, and that's up from 96 million last quarter, and that's up 18 to 25% margin. So last quarter we had 96 million and 18% margin. This quarter we have 141 million and 25% margin. Cash from operations is the actual cash that you get from the business. This is from like actually running the business, how much money is coming in. And the adjusted free cash flow is essentially the cash from the business after making adjustments. So you play with the numbers. The same way you have GAAP profitable and adjusted GAAP profitability or adjusted earnings per share. You guys can take the numbers for whatever you want. Just understand the massive, massive gains that Palantir is doing. Now, this is a really good number. Cash. We have cash and cash equivalent of $3.3 billion. Last quarter, we had $3.1 billion. That is a growth of exactly 6.45% month over month. But the best thing is, last year, our cash and cash equivalent was $2.4 billion. And this year, $3.3 billion. And if you can't do the math off the top of your head, and I have a cheat sheet right in front of me, that's a 37.5% gain year over year. That means in the last year, we increased the amount of cash that we have on hand by 37.5%. Now, you might say, well, Adam, that's because we're increasing our stock-based compensation. And that's actually not a fact because our stock-based compensation remained flat for the last 3 quarters, which I'll get to in just a moment. But understand that our numbers are just going up. We're making more deals. We're making more cash. We're keeping more cash. Our margins are going up. And we have no debt. Not to mention, we have a credit line for $950 million that we can pull on at any point in time. These are absolutely massive numbers, and everybody in the Palantir community should be absolutely excited and stoked at this absolutely pure bliss and awesomeness of what I hope is going to be our start of a Tesla and NVIDIA moment. Of course, none of this is financial advice, purely entertainment and education, and what you do with this information is up to you. Do your own due diligence, do your own research, and this is purely entertainment. And if you are entertained, hit the like button, please. I'm trying to get to 6,000 subscribers before the end of the year. I'm at like 5,420 right now. Thank you. We actually had a lot of growth in quarter 3. I'm going to compare quarter 3 to quarter 2. In quarter 3, our commercial growth was up 23% year over year and 251 million. In the same time of quarter 2, we only grew 10%. Instead of 23%, 10%, and our numbers were at 232 million. For US commercial, this is our strongest sector. We grew this quarter at 33% for 116 million. Last quarter, we grew 20% year over year for 103 million. So total commercial is absolutely smacking. We went from 10% growth to 23% growth, which means we are growing around the globe. This is what we need. We need more contracts outside of the United States. But we're also smacking in the United States, growing 33%. And last quarter, we grew 20%. This is an increase of like 55%. These are massive numbers. So we more than doubled total commercial growth, and we're 50% plus in US commercial growth. Now, government growth did go a little bit down. We're at 12% year over year. And last quarter, we were at 15% year over year. That can be due to fiscal periods, but government is absolutely going to be a massive business and is a massive business. And as per Dr. Alex Karp, Shyam Sankar, and the team at Palantir, they said that the increased geopolitical uncertainty, and excuse my language, the way the world is fucked up right now, there is an massive increase in demand for government contracts, both domestically and abroad. God forbid there's going to be terror attacks throughout the world, in the United States and the United States allies. This is going to increase contracts like crazy. Now, I don't wish this by any means, and I hope it doesn't happen. But chances of things like this happening are increasing every single day. You guys see it right before your eyes. Literally, you have Hamas calling for an attack against West, asking for China and for Russia to destabilize the United States economy, and the leader of Hamas saying that they will do this October 7th atrocity, cowardly act again and again and again. So you think these people are not going to increase terror attacks throughout the world? I hope it doesn't happen. But even if it doesn't happen, and I hope it doesn't, there's still going to be a huge need for a deterrence, and that's where Palantir comes along. Palantir unequivocally said that they stand with Israel. Shout out to that. Thank you so much. I'm very proud of you. And they said, listen, you got to pick a side. Either you're for democracy, the United States and her allies, or you're not. And in plain English, we stand with Israel. It was literally the second or third page of the slide. Of course, they're going to stand with Israel. They're working with Israel. They had a working relationship with Israel. And Shyam Sanker says that we are now with our partners. So they said we are working with Israel, which is something that me, Amit, Vince, and Arnie spoke about earlier today. When we say we, I think they're talking about FedStart partners. So they're on-ramping a lot of companies, a lot of startups to work with the DoD through their FedStart program, where they're using their IL-5 and soon to be IL-6 accreditation with the DoD to on-ramp companies that can offer technical solutions to the military, but they might not have the right clearance. And essentially, Palantir has them use Palantir Foundry, and Palantir is essentially the auditor for these companies. I think that they are working with these companies to work with other countries, including specifically Israel. The word we came out of Shyam Sanker's mouth. That's not me making that up. That's what he said specifically when asked about Israel and working with Israel. Guys, I want to talk about gap numbers, gap profitability, and I want to talk about gap income. So I'm going to give you 5 numbers. So this is going to be quarter 3, quarter 2, quarter 1, and quarter 4 of last year, and maybe quarter 3 of last year. So we went so this is going to be for gap profitability. We went from negative 123 million to positive 30.9 million to positive 16.8 million. So it dropped a little bit to positive 28.1 million. And now we have a massive 71.5 million positive. Guys, a year ago, we were negative 123 million. Now we are positive 71 million. Last quarter, we were positive 28.1 million. We more than doubled it. We smashed it by like 60%. For gap income, it's even more impressive. We went from 62.2 million negative to 17.8 million negative to 4.1 million positive to last quarter 10.1 million positive to this quarter 40 million positive. That is a 400% increase in gap income, generally accepted accounting principle income. That is massive. You don't need to know these definitions. You don't need to be a CPA. You don't need to be a certified financial analyst. You don't need to be a bookworm or a nerd or whatever you want to call it. Just understand the numbers. We went from 28.1 million to 71.5 million. We went from 10.1 million to 40 million. We went from cash and cash equivalents 1 year ago for 2.4 billion to today 3.3 billion. These are massive numbers. You don't need to be a genius to understand these are huge numbers. You know what else is huge? Our top 20 customers. The top 20 customers bring in on an average of $54 million. $54 million per contract. That's up 13% from last quarter. From year over year. It just keeps increasing, increasing, and increasing. Guys, these numbers are freaking massive. You know what didn't go up? Stock-based compensation, 114 million. This quarter, last quarter, the quarter before that. And you know what? The quarters before that, we were at 140 million, which means stock-based compensation is going down. While our cash is going up, our deals are going up. All our numbers are going up, the good numbers, and all our bad numbers are going down, which means the dilution is going down. Before, we were able to keep costs down because we were offering stock-based compensation. Well, that is going down dramatically. You know what other numbers are actually staying flat or going down? Our cost of revenue. So every dollar that you make costs you something. So let's go over the numbers. The cost of revenue was $107 million. Okay? The cost of revenue that we had was $107 million. Guess what? 1 year ago, not last quarter, 1 year ago, the cost of revenue was $107 million. I'm going to give you a couple of other data points. Sales and marketing is actually down 8 million. Research and development is up 5 million. And our general and administrative is down 20 million. Guys, this is for the year, okay? So our total operating expenses for 2022 was 432 million. But for 2023, 410 million. This is for the quarter, right? From last year to this year. Think about that. We are, saving $22 million in expenses, and we are increasing the total amount of money coming in. It's absolutely freaking massive. It's not a joke. Now, Shyam Sankar was asked a couple of things. They were asked a few things, and they were talking about, what are they looking forward to? So Shyam Sankar talked about GWS, which is Government Web Services. He said the first two products is FedStart and Apollo. Well, if he said those are the first two products, there must be many more products to come because they keep building on their existing platforms. Somebody asked him, hey, what about your competitors? Are you competing with the DoD primes? And Shyam Sankar said, no. Two of our DoD primes are using Palantir Apollo. Two of them are using Palantir Foundry. And one of them is actually our partner for the Titan program. Now, Titan, we're building a prototype against Raytheon right now. We're building it with Anduril, and Raytheon is bidding against us. We were supposed to get some news about this actually in September. We didn't hear nothing about it. If the news would have been bad, we wouldn't have mentioned Titan. Since I believe it's leaning towards Palantir, or we already got that answer, but we don't know about it as the public, that's why he mentioned Titan, because it's on his mind. That's just me hypothesizing. Now, our net client retention was only 107%. That means that for every $100 that a client is giving us next quarter, next year, they're giving us $107. They're increasing by a certain percent. At one point, our net dollar retention was like 140 something percent for Palantir, and it's been going down every single quarter. They mentioned this does not include the last year's clients that we're adopting from artificial intelligence. So I have a feeling, as I've been saying, in quarter 3, quarter 4 of next year, we will see a massive uptick in net dollar retention for our clients, probably even quarter 2 of next year. They said the demand for artificial intelligence platform is ridiculous and that they're getting more demand in a session than they have for an entire year with their other products. If you're using Palantir AIP, you must stack it with Palantir Foundry. Our net dollar retention is going to go up dramatically. That's what I'm forecasting. That is what I'm predicting in a non-financial way. Purely entertainment and education. And if you're not entertained, leave the channel. But if you are entertained, please hit me a like, a subscribe, and a share so that I could get to my goal of 6,000 subscribers by the end of the year. I would really appreciate that. And if you want to show further support, I have channel membership. It's $3 a month. It supports my coffee habits. And I do put out other content, mainly on trading options for covered calls and cash secured puts if you like that type of stuff. And then, give you some alerts for crypto and some other things. Guys, at the end of the day, I feel like we do have our Tesla moment starting, like we have our NVIDIA moment starting. Palantir's government contracts are going to grow like wildfire. Palantir's commercial contracts are growing like wildfire. AIP is just starting to catch on. People are just starting to understand it. We're getting unbelievable reviews. We went from 1% market share of hospital beds to 16% market share of hospital beds within a year. 2 years ago, we weren't in healthcare at all. We are on the cusp of getting an NHS contract for $600 million equivalent. I believe that it's going to Palantir. And this world is just going to be worse and worse. Nothing's stopping. Somebody says war is good for Palantir, so if there's not going to be any war under Donald Trump, that is bad for Palantir. And to this is wrong. It's absolutely a goofy statement, and I'll explain why. No war is great for Palantir because the whole point of Palantir is not to have war. The whole point of Palantir is to be so good that it's a deterrent for war. And more spending is going to be used to deter war than the spending that would be used if we are currently in war. That is the new bullets as per Bank of America. And if that's the case, then Palantir is a nuclear weapon, an atomic bomb, a futuristic laser bomb that doesn't even exist if data is the new bullets. Because Palantir is the only company that can comb through or help you comb through billions of data points in real time. I think this is just the beginning, and I'm super happy to be on this journey with all of you. in the Palantir community. It sucks to make videos when everything's going bad, although I did it and a couple of others in the community. And then all of a sudden, new people start popping up when things are starting to go good, or old people start popping up when things are starting to go good. At the end of the day, I'm here. It's my largest position. I was buying, all the way down at the $8 ranges. I brought down my average. And then I started buying at 15s, and I even started buying at 17s, high 16s, low 17s. Look, the world needs Palantir. Palantir knew the world needs them before the world knows that they need Palantir. Palantir ain't going nowhere, just getting started, in my personal opinion. And remember, Snowflake, Datadog, Databricks, C3 AI, and all of the other competitors are doing a lot of mergers and acquisitions, spending a shit ton of money just to acquire companies to try to make a product like Palantir AIP. And they won't have their product until second half of 2024, I predict. Well, can you imagine how much more productive and how much more capable Palantir is going to be in a year from now when they just get their product? Could you imagine how hard it's going to be to get Palantir clients away from Palantir when they're already using Palantir AIP and it's just that good and they've been using it for the last 6 months, 7 months, 8 months, 9 months? It's not going to happen. They're going to keep increasing market share of this new AI revolution. For the first time, it's not a question of if or how. It's like, wow, they are. Can they keep increasing, doing what they are right now? And I think the answer is yes. Thank you very much. Everybody have a great day. I'll see you guys in the next one.